feel paralyzed.
You just got wrecked.
I'm okay. Nope, I'm fine. Nope.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So it's Monday, back on the grind. Pleasure to have you back on the channel. If we have a look at what's going on, it's not exactly the most beautiful Monday in crypto land. Now, we did have an incredible run-up, okay? Bitcoin was well over $13,000, and we have had a pullback. You can see Bitcoin's down 7.63%. Interesting, you're not seeing some of the top altcoins get hit just as hard, so we're going to discuss that. But I do also want to talk about where we are short-term and where we're headed long-term, because yesterday I put out this video, guys, and I was talking about a massive Bitcoin correction, potential chance of going down to $4,000, and it seems like a lot of people were upset. Now, if you actually watch the video, I said I don't think we're going down to $4,000. I think that's way too low, but I do think that we do have some potential lower targets that we could hit. So I actually put together this chart right here, and I want to compare the last full cycle that we had of the bull and bear to what we're doing right now, and hopefully that helps to paint a little bit of a picture and allows you to understand exactly where we are, because guys, listen, you know how I feel about this space. I mean, I am definitely in it until the end. I mean, I'm talking $100,000 Bitcoin, potentially $1 million Bitcoin. I'm not going anywhere, guys, but short term, we could have some choppy waters ahead. So that's all. I just wanted to talk about that. So thank you for coming back to the channel. If that sounds awesome to you, well, you know what to do. Also, today is Monday, which means we do the Ledger Nano S giveaway. That'll be at the end of the video. You know what to do. Drop a comment on literally any video of the day. And also, we're going to talk about what the heck is this on Bitfinex with all of these shorts. I mean, right here we have about, let's see, yeah, over 20,000. So we're going to have a look at that. So let's give this a quick refresh live. Now, we are noticing that Bitcoin dominance is still falling. Market cap is also still falling. So there's two things that are happening right now that I could basically paint just by looking at this. Number one is that we are moving into stable coins. You're seeing some of those Bitcoin profits get put back into Tether, back into USDC, back into Paxos, right? And we're seeing some of them trickle into the altcoins, which is why, even though we're seeing a lot of green today, which we normally don't have this on the Bitcoin comparative, if we do switch today, you actually notice a lot of coins in the green, which means that a lot of altcoins today are outperforming Bitcoin. So today is a day where you'd actually be better off holding altcoins than Bitcoin. And we did say that after Bitcoin has a massive run up, we do tend to see some of those profits trickle down into the altcoins, first into the bigger ones, and then into the lower ones. So you're seeing right now, we have Holochain up 8.45%, Komodo 7, Basic Attention, Engine, BitTorrent, Quant, Knowles, Nebulous, Mixin, Crypto.com, Dent. Okay, so we do have some nice gainers today. Having a look at what is going on over here, we are noticing that there are mostly sells across the exchanges, and the shorts are up to 52.3%, which is relatively high. So obviously there is a little bit of a bearish sentiment today in the markets. Now, we did fall out of this potential zone that we were in, and we are back in the blue zone that we've been talking about for quite some time. We've spent a decent amount of time in this region, and you can see we are coming to a potential crucial point right here if we do continue sideways. Right around July 7th, we were saying there may even actually be a breakout or breakdown sooner. Jokingly, we were saying July 4th, but it could happen sooner than later, right? Another way that you could look at it is we fell out of this channel that we were in. We had spent a lot of time in there, and what I'm looking for short term is to hopefully be supported by the top of this trend, which was the top of the ascending, broadening wedge that we had. This was the potential third one that we might be forming. I'm going to get into that in just a second. So like I said, if we were to dip a little bit lower, even just today, you could see Bitcoin around $10,400 potentially, today. That is a possibility, but we have to see moving forward. Now, you guys said maybe yesterday I was too bearish, so fine. Let's talk about some bullish potentials, okay? So this is called a Gartley pattern, and some people have pointed this out. And as you can see right here from point zero, you basically reach a peak, You retrace, you have a lower high, you come down to this, and then you actually do have a breakout to the upside. So if we have a look at this, let me just get rid of all of these. You know, some people are asking the question, are we having that right now? You know, where you have this, the higher one here, down here, up and down, right? I forgot that sorry guys, I didn't mean to have all the stuff come back. But essentially you could see right here, if I get rid of this, it's forming a little bit of an M shape, right? And that's sort of what we're doing right now. So if that is the case, even though we're not playing out exactly to the fib levels, then we will have a potential breakout to the upside, okay? So that is the bullish scenario, because I don't want to make anybody angry out there saying that we're being too bearish on this channel. So having a look at this ascending broadening wedge that we may be forming, we have been held by this support right here. Now, if we were to fall lower, then I would say we would end up in this region, and then we would be forming a gigantic ascending broadening wedge, which unfortunately could bring us down somewhere to $9,200, $9,300 should we not be held by this support. But currently we have been held by this support, so we'll have to keep our eyes on it, right? I'm not going to make any crazy assumptions. You see, we actually did wick down to about $10,479 this morning, got instantly pulled back up into the channel. So it is currently respecting this trend. Now, if we zoom out, really simple, okay? Just look at it on the weekly right here. You know, it doesn't take a genius to see that we are still maintaining this trend. Now, we did get a little bit ahead of ourselves right here, so maybe we do need to come back down, retest, cool off a little bit, obviously, but you guys know the trend is your friend until the end, and we haven't put in, lower low. Okay, even these lows right here, they're still higher than the lows that we put in here. So we're putting in higher low, higher low, higher low, definitely higher low. So this is something to point out as positive. Now, we did have this right here, okay? Now, some people, technically this isn't really a gravestone doji. It is a doji. Normally you'd want this, the wick, not the wick, the candle to be more towards the bottom, but it is still somewhat of a bearish move. I mean, you could see right here from top to bottom, you know, we did have a 26% pullback. So we have already had that correction, but do we need to go a little bit lower? Do you guys think we need to potentially come down and touch maybe somewhere here? That would put us around that 30% pullback that we've been talking about. That'd be around $9,600. Okay, so we do still have that potential chance. Now, this is common. I mean, look at what we had back here. After we had this massive run up, okay, we had that accumulation that started around April 26th, breakout around April 30th. You could see we came all the way up here. Okay, and we had a 64% pump followed by, and this was that fat finger trade down to a 26% pullback, right? So currently where we're sitting right now from the top to where the price is right now is about a 24%, but you can see we put in a 26% when we pulled down to 10,300. So this is just how markets move. And so far, I have no reason to consider anything out of the ordinary. There's nothing crazy about what happened. What actually is crazy is the fact that we ran all the way up to $13,800. That was the crazy part. We needed to cool off. We needed to come down a little bit, right? But I want to point out something that is really important that a lot of people aren't really talking about, and that's the fact that even at the current point that we're at right now, it still is less of a percentage to get back to the all-time high than it took to get from the low to where we are now. You could see when we put in that low back in December, around 3,200, 3,100, depending on where you look, we actually pumped 337% all the way up to that 13,000, depending on which exchange you look at, $13,963 level, right? So we did 336%. Now, if we look at just where we are currently, right now, okay, we went from the low all the way here, so that's 232%. Now, it was 232% from the low to where we are currently. So where do we need to go from where we are now to the all-time high? Well, guys, you're going to be shocked, but it's only 87%. So getting from where we are now to 20K is still theoretically easier, right? I mean, yes, okay, it takes more capital, but percentage-wise, it's much less. So I just want to remind you guys, we can still get to 20K very, very quickly. However, it wouldn't be a surprise to retest some of these other levels that we had, especially if you're still under the impression that we do need to close the CME futures gaps. Now, let me have a look at the bigger picture. We got to stop refreshing our blockfolio every 5 seconds and just looking at what's happening in the past hour, okay? This is the bigger picture. Obviously, you could see the general trend is up. Bitcoin is going up. We're not going down. Anyone can see that. A 5-year-old could see that, okay? So what I've done is I've broken it down, and there's charts all over the internet floating around, but I figured we'd look at this today, look at it on our trading view, okay? So these green boxes represent the bull markets, okay? These red zones represent the bear market. Now, this blue right here and this blue right here is the accumulation phase. That's the phase at the bottom of the bear market where we just sort of go sideways for a little bit. And then we have what's called as the expansion stage, right? Where we have a massive pop. So our expansion stage back in 2015 started sometime around August 10th, maybe not exactly down to the date, and it ended sometime around October 26th, right? And then what we started doing was we actually relaxed and we went into what's called the reaccumulation phase. Now, this is where we go sideways. We actually go sideways and we go slightly upwards, but it's nothing parabolic. It's nothing crazy. We're not like going to the moon, right? And then eventually, once we've accumulated enough, we enter the next phase of the crazy bull market, okay? So that is basically the phase. That's the cycle. That's how it goes. Well, let's go to where we are right now. You can see we've had our bull run. We've had our bear market. We've had our we've had our accumulation, all right? So currently what we've seen is the expansion stage. Now, if we go back to the previous expansion stage that happened right here, where you could see where we peaked out, let's actually see how much we lost right there, okay? Just so we could figure this out. So we came from here all the way down. So guys, that was about a 45 to 46% roughly retracement, okay? So currently where we are right now, why would it not be a surprise to go from where we were around that $13,900 level, potentially down to, levels like 7,200 to close the gap, right? To close the CME futures gap. Because then what's going to happen is we're going to, if history does repeat itself, which it's not guaranteed, but it does tend to rhyme, well, then it looks like we would potentially enter a reaccumulation phase for, obviously a few months, potentially even to the end of the year, into next year, before really having that blast off. And we also know that usually tends to happen right around the halving event, which is going to be happening in May. So if we go right here and find basically where May is, then if we bring our box back right around here, okay, then right around this time, we should be gearing up for the next massive parabolic green run. So, when we're going back and looking at what's happening today and we're upset that Bitcoin is dumping, this is so small on the scale, guys, okay? So I just wanted to point that out and give you an idea of where we're at, why you shouldn't freak out, and obviously understand that dollar cost averaging, in my opinion, is the best strategy if you don't have time to day trade or, leverage trade or stuff like that. Now, just once again, to prove the point, you can see that Bitcoin has been profitable as an investment 98.2% of its days since creation. This is according to HODLcalc.com. So counting 3,830 days all the way back to January 4th of 2009, which is one day after the Genesis block for Bitcoin, you could see that 3,671 of those days Bitcoin was profitable. Maybe because recently we fell today, maybe it's a little bit less, all right? But that leaves about only 69 days that were unprofitable in Bitcoin's history. Obviously, December and January obviously were the times you really didn't want to buy, but that's when everybody came in and bought. Listen, we're all guilty, right? So if you come over here, you could see that even guys like Spencer Bogart recommends that you should hold at least 1% of your portfolio in Bitcoin for at least the next 3 years. He also says that he thinks that Facebook's Libra coin had something to do with the pump. But if you come over here, you can actually go to 99bitcoins.com and check out the HODL calculator. And just pick a day. Pick any day you want. April 19th of 2017. I don't know. Say you bought $1,000 worth of Bitcoin. What would you have today? Well, it says you would have $7,641, right? So if you pick basically any time except for, those 2 months and just recently what's happened, you can see that Bitcoin has clearly been the greatest store of value of all time. So freaking out short term, all it's providing is better opportunities to buy. And that's really all I was trying to say in yesterday's video. I wasn't trying to say doom and gloom, we're going to go down to 4K. In fact, I was saying I don't think we were, but these present opportunities. Do you want Bitcoin to just be 25,000 tomorrow? That means you have to pay $25,000 to buy a Bitcoin. Do you want to pay that? I don't. I would like to accumulate some more around 10, maybe even 9. I mean, if you guys think it's going to go down to 7,000 too, put a buy order in on Binance or whatever exchange. I know I say don't keep your money on exchanges, but you could have one of those crazy flash crashes and scoop up some really cheap Bitcoin. I've seen it happen before, guys, right? So that's basically the situation. I hope that kind of ties it all in together. I'm not bearish, guys. I just want to make sure that we look at both sides of the coin. I don't want to just be like, yes, to the moon, and then we're just getting wrecked every single day, okay? Realistically, we got to look at it. So let's talk about this short. What the heck happened here, guys? So why didn't we have a short squeeze is the question, right? Usually you would think we would pop off, right? And we'd have a massive blast. Well, we didn't. So a short squeeze, for those of you that don't know, is a situation in which a heavily shorted stock or commodity moves sharply higher, forcing short sellers to close out their short positions and adding to an upward pressure to the stock. Short sellers are being squeezed out of their short positions, usually at a loss. Short squeezes are generally triggered by a positive development that suggests that the stock may be embarking on a turnaround. Well, we didn't have that. Bitcoin didn't go up. So that's not the case. Well, it looks like, I didn't really spend a lot of time trying to figure this out because really this is just one of those things where you just come up with as many conspiracy theories as you want as to why it happened. But one of the best examples I found was actually from Ismail Tarim over here. And he basically says this is how you use claim feature on Bitfinex to dump into market without getting caught by whale watchers or other big players. So I'm going to read this to you. Don't freak out. He actually repeats himself multiple times, so we don't have to read this whole thing. But essentially this is what happens, or what may have happened, okay? A trader will transfer about 2,000 Bitcoin to Bitfinex. Yes, everyone will see it, but considering that we're very bullish, no one's surprised to see a big whale transfer like that, right? Basically, market sell it, get $22 million, short sell another 5,000 Bitcoin, short position 55 million using previous 22 million as collateral. Market will think, what an idiot shorting bullish Bitcoin. Those shorts piling up and will get liquidated. So then you do this 3 more times, okay? At this point, you have 20,000 Bitcoin short position worth 220 million. You also market sold 8,000 Bitcoin in the process, so you actually dumped 28,000 Bitcoin to market, and no one realized. Transfer 20,000 Bitcoin to Bitfinex, close your short by claim. Whoa, what happened to all those shorts, which we thought would get squeezed? So there you go. If this is a little bit complicated, a little bit over your head, don't really worry, guys. It's fine. But yeah, so that is basically a good example, I think, of what potentially could have happened. But getting back to Bitcoin, I got to tell you, this was one of the coolest things I've read in a while. Really put perspective. And this is off the chain. This is Anthony Pompliano. This came out, I believe it was this morning. And I want to read this to you. So he talks about the countries with the strongest military that has historically implemented their national monetary system. He talks about silver, drachma of the ancient Athens. I'm probably going to pronounce everything wrong here. He talks about, the Byzantine Empire, etc. Obviously, we talk about the British pound sterling that remained the global reserve until about World War II. And then, we switched it over to the US dollar, and that's basically what we've been holding since. But here's the interesting thing, and this is what I love about Bitcoin. This is why I long Bitcoin and I short the bankers. And yes, I did buy the t-shirt. I actually did. The t-shirt came just the other day. So previously, the country with superior military firepower and tactics prevailed. It mattered who had the upper hand on land, sea, or air. But given where we're going, the bombs, the bullets, the tanks, the ships, and fighter jets just aren't going to be nearly as important as they once were. He says we're moving from physical warfare to cyber warfare. There's only one problem with the military, economic, and cyber strategy, though. What happens if we can't attack a country through military firepower, economic sanctions, or cyber warfare? Interesting. The creators of Bitcoin focused on defense rather than offense. Instead of conceiving a plan to gain superiority by attacking other countries or currencies, Bitcoin is designed in a way to survive any known attack. You could say that the strategy falls in line with the belief that the best offense is in fact defense. Look at the 3 main threats to a currency's global reserve status: military superiority, economic sanctions, cyber warfare. But what does this mean for Bitcoin? Well, Bitcoin is the first world currency that, number 1, is not backed by a nation state, and number 2, has the ability to withstand any and all attacks by every nation state in the world. Quite literally, the defense-first approach to Bitcoin's design is likely to have led us to a world where cryptocurrency dominance shifts from military, economic, cyber superiority to anti-fragile superiority. So, Bitcoin's Department of Defense has no bullets, no bombs, no ships, no fighter jets, no soldiers. It has thousands of volunteers and millions of computers around the world that are cooperating to ensure that there is no single point of failure. The world is changing quickly. Nation states are behind the curve, and Bitcoin is the sleeping giant that is well positioned to be the first currency to achieve global reserve status without ever having to engage in conflict. Now, if that doesn't get you excited, I don't know what does, guys. And this is the real reason behind it, okay? Yes, we love to make money. Yes, we love to become super ultimate bajillionaires overnight, right? But realistically, you have to understand that this is not only the greatest store of value all time, but it could potentially change the world, literally, guys. You've seen what it's done over in Venezuela. You've seen how it can circumvent these sanctions. And obviously, you know how I feel about it, guys. And this is the reason that I continue to do this every single day. And also, I thought this was a funny clip from Andreas Antonopoulos about a friend that was starting to write a book who actually thought that Bitcoin was a Ponzi scheme. And I want you to see what he ended up saying about it.
They were telling me they started writing a book about why Bitcoin is a Ponzi scheme. And they started doing the research for that book and then abandoned it 3 quarters in because they disproved all of their points.
So basically, they set out to start writing a book about how Bitcoin was a Ponzi scheme, and during the research found out that it actually isn't a Ponzi at all. So yeah, I thought that was pretty awesome. And if that's not cool and that's not enough for you guys, well, how to buy Bitcoin, which has rocketed in value in recent months. That's right, CNBC is back, and the news is talking about Bitcoin. They're telling you how to buy on Coinbase. And yeah, so this is what people are seeing. People are seeing excitement, and I do think that we will have that next wave of retail once we do get above 20K. But in the meantime, enjoy the opportunity to accumulate. I sure am. Now, that's it for today. That's my video for Monday. We got to give away a Ledger Nano S. So we had, obviously, 7 days in a week. So let's set this 1 to 7. Generate. Oh, Monday's video. Okay, so we have to go to Monday. That was buy Bitcoin now or wait for a price correction. Well, I forget when that video came out. What was the price actually when that video came out? 10,800. Well, I guess at that point, wait for a price correction. That would have probably been the answer, I suppose. So, all right, great. So let's go back to the video. We have to copy this here. Go to the random comment generator, or picker, I should say. Let's see how much we got here. All right, we have 883 unique comments. All right, drum roll, please, for the Ledger Nano S. Alec Martin, thanks, K-Dub. Well, you're very welcome, Alec Martin. So you know how it goes. You have 24 hours. You can hit me up either in the official Telegram, which the link is on my YouTube page, or you can hit me up in the About section and you can send me an email. So congratulations, and to everyone out there, thank you so much again for coming back to the channel. It is not it's not the most beautiful of days today. It's a pretty ugly day for Bitcoin, but it's okay because we